when you're getting a loan, there's all these different types of loans. There's FHA, there's these balloon loans. Which ones would you recommend? Which ones would you tell people to stay away from it, and why?
So typically what we're seeing the most today, you don't see many balloons. I like balloons, but that's for more of an investor. Uh, but you're mainly going to look at two different loans, the conventional loan and the FHA loan. The FHA loan is the government backed loan. The conventional loan is not. And, there's benefits to both of them. Okay. For instance, the reason why FHA was such a popular loan, especially in the Black community, is because one, they're a little bit more lenient on credit. They're a little bit more lenient on guidelines, debt to income ratios, how much you can actually qualify for. But the biggest thing that always made them stand out was you could put a little less money down. For FHA, it's 3.5%, whereas traditionally for conventional, it was always 5%. Now, the conventional loans have actually changed a little bit. So my favorite type of loan is it's a conventional loan where you can actually just put 3% down. Now, the more money you can put down, I won't necessarily say the better. It depends on the situation, but traditionally, the more money you put down, the better interest rates you get, and the easier you can kind of get into a property, because everything's about risk when it comes to the bank. And so someone putting down more money is a lot less risk in the event that they default. But either way, whether you go FHA or conventional, they're both pretty decent products. I just prefer conventional because it's less red tape. Even with appraisals, the inspection that's done by the bank through the appraisal, it's not as intense as it is with a conventional loan. Whereas with the FHA or a government-backed loan, you're going to have to maybe, get some things done to the property. So it's just a easier and more simple loan process. And now with you actually being able to put even less money down on a conventional, I typically try to push my clients that way.
So the balloon loans, like from a standpoint of somebody who's just buying a house, they might look enticing because most of the time from what I've seen is that the interest rate is lower. So like, ooh, interest rate lower, my mortgage is going to be lower. So for the average person, would you tell them to stay away from it, use it? What's your advice on that?
I would tell the average person to stay away from a balloon loan. And the reason why I say it's better for investors is because the way the balloon loan works, for anyone who doesn't understand, let's say you have a 10-year balloon, right? And you get this loan, it's amortized over a 30-year period in most cases, which means that the monthly payment is going to be based off of, it'll be similar as if it was a 30-year loan. But with the balloon, at that 10-year mark, the full balance is due. So let's say you borrow $100,000, okay? And your mortgage payment is $650 a month because it's amortized over 30 years. From that 1-year mark to the 10-year mark, you may have dropped it from 100,000 to 70,000. It's typically not going to, that's just a ballpark figure. At that 10-year moment, that full balance is due. Now, I've seen clients use the balloon loan, and what they'll typically do if they don't have the full 70,000, they'll usually refinance it into another balloon loan. So the reason why it's good for investors is because a lot of lenders will only, first and foremost, you have to put down a lot more money for an investment property. Some lenders want you to put down as much as 25%. And secondly, a lot of other lenders will only give you a 15-year loan for an investment. They won't do 30 years.
They want their money ASAP.
Right. And it's all about risk with the bank. And so what the balloon loan offers an investor the opportunity is to get a much smaller payment because they're most concerned about cash flow. And so if your payment is based off of 30 years, you make more money on that monthly rental income. But the downside is, like I said, at that 10-year mark, the full balance is due. So you either need to refinance it or you need to sell it, or you typically have the money. So it's not really geared towards, I would say, a normal first-time home buyer or a family that's looking to purchase a property.
Now, one loan that I didn't know about prior to purchasing my home, and when I'm talking to other people that are looking to buy a home, are the USDA loans. A lot of people don't know that, and when my agent first told us that, yeah, there's no money down, there's some qualifications, credit score has to be a certain way, and I said, well, what's the catch? And they said, well, it has to be that the property has to be in an area where it consider it rural. So there's a website, obviously, where you go in there, you make sure that home is there. Talk a little bit about the USDA loans, because I don't think a lot of people know about that. It seems like every time I talk to people about anything, when they're talking about buying a home, they've never heard of the USDA loans before.
Right. So it's two loans that we'll touch on that are very similar, the USDA and the VA loan, for any veterans out there. The special thing about both of those loans, they're both 100% financing, meaning there's no down payment. Now, with the conventional and the FHA, we just talked about between 3 and 5% on a conventional down, 3.5% on an FHA. But with USDA and VA, and by the way, if you're a veteran, that's the only way you'll qualify for a VA loan. But it's no down payment. And so you can actually get a loan, a home with no money out of your pocket in those scenarios.
Just closing costs.
Yeah, but even I've helped so many people get homes without having to bring a penny. Because maybe we were able to get the seller to pay the closing costs. So if you're getting 100% financing loan, whether that's through USDA or VA, and the seller's paying your closing costs, just give me the keys. Wow. Yeah, and I've done that many of times for people. Of course, it depends on the market.
And the seller as well. If they
Correct.
want to cover the most, or they split it, or
right. Yeah. And right now we have a hot real estate market. So if someone's getting 10 offers, 7 of them are not going to be asking for closing help. Wow. And so it really just depends. Now, as far as the USDA, it's area specific. It's usually in those rural areas because it's also a government-backed loan, just like the VA is a government-backed loan and the FHA is a government-backed loan. And so for areas where there's typically lower income, it's a way to help those buyers get into a home who may not have a ton of cash saved up. And so, as far as the specifics, it's literally just based on the area. And I don't believe it's income based. Like a lot of grant programs are, where you have to make under a certain threshold of income. But it's strictly just if you're in that area and you qualify, you can get a loan 100% financing. And I personally always recommend putting down the least amount of money if you can. I'm not a big fan of putting down all this ton of cash if you don't have to, because regardless, you'll only get approved for what you qualify for anyway. So you don't really have to worry about, oh, well, maybe I shouldn't have kept this money in my pocket because I can't afford it. No, you don't have to worry about that.
Mm-hmm. Yeah. Because like I said, I had to pay some closing costs. But yeah, when there was no money down, so I said, well, that's extra money you can use to buy furniture, But I just when I first learned about the USDA loan, I said, what's the catch? What's the catch? And like, no, it's just some people don't want to live in a rural area. They want to be able to pick a home wherever they want. So, once I found a house, I was like, oh, this one falls on the USDA. Call the agent up, and was off to the races.
Why didn't you call this agent up? I'm not so I didn't need to put you on the spot like that, bro.
I'll tell you what.
Do I call you, Joe, when I got some?
You sure do. You sure do. You know what? I'll tell you how it happened. So this was a client of mine, and we were just randomly talking about homes one day. Like I would say, yeah, I want to buy a home one day. And she said, oh, well, I can put you in contact. There's a local lender. So at the time, I just was curious. I said, well, let me just go ask some questions and stuff. At the time, I wasn't like, oh yeah, I definitely want to purchase a home. It was kind of in between. So I went to go meet with the lender. And then it kind of just turned into a snowball effect. So I said, man, I might as well, like I have friends that I can call. Like I have Darius I can call because he calls me when he needs me. So I'm like, I could definitely call him. But I said, but she already referred me to her lender. And it felt like I would kind of like be stepping on her toes by not, going with her through the whole process. So I felt like I had kind of already committed just by going to her lender, not thinking about it. But I know when it is time to sell my house and purchase another house or something, then you already got my word that you're going to be the guy that I call up.
Hey, Joe, I was just messing with you.
I know, man. But see, I didn't see, but I want to make sure we all good. So,
right.
Because I'll tell you this, some real estate agents, they take stuff personal. I have clients now that have found out that like I never told a lot of them when I bought a house, because one of them actually got upset. I was like, you didn't call me? Right. And I'm like, well, I can't call every, agent, and they took it personal. So I said,
missed out on a lot of money. That's why.
Right. And look, in full disclosure, Joe works with a lot of realtors. So no, I would never take offense to that either way. So I just,
nah, it's all good.
I hope
entertainment purposes only.
I hope you kept the money in the Black community though.
We're good. We're good.
What does that mean?
That mean we all good
I just
in the
saw a
black in
thumbs
the
up.
community.
Okay.
We all good in the community.
Like, I'm not gonna say yes. I'm not gonna say no, but I'll give you a thumbs up.
Was it Jennifer?
It was Karen.